Well, hi, everybody, and welcome to this Buffett and Beyond Saturday market recap letter for September 28th, 2019. And these methodologies are based on the book Buffett and Beyond, second edition by Dr. Joseph Belmonte. And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. And this week, the market is reacting to every single bit of news that's hitting the wires and the TV and the radio and any other place you get news. And the S&P broke below the 20-day moving average, as we're going to see in a minute. And it's beginning to test the 50-day moving average. And our podcast, well, we're updating the numbers on Home Depot. And folks, they're looking really good. Although the robust growth days are behind this company, as you'll see by the retention rate, which we'll explain in the podcast, the company is beginning to throw off a lot of cash. As they say in marketing, it's beginning to become a cash cow. And let us look at the S&P 500, and the top band and the bottom band are volatility bands, and they're coming together. And usually when they come together, the market goes in one direction or the other very, very quickly. And right here, you can see that it's been playing around this center line, which is the 20-day moving average. And as I'm recording this late Friday afternoon, it's below that 20-day moving average by quite a bit. And in fact, at the bottom of the range for the day. And so the next stop, we would think, is this bottom band down here. And we really don't want to see the volatility increase and start widening those bands. That would be a bad sign. But right now, we expect it to go down to this bottom band, and we're looking at about 29.20, 29.15, somewhere in there, as the market will try to make a stand down there. Now, the bad thing is down here, the intermediate term index has definitely turned down. It was playing around for a while. It didn't want to cross the red line, and I'm talking about the blue line, which is the leading indicator in this intermediate term indicator. But now that blue line has definitely crossed that red line. So we are going to have headwinds in this market for a while, folks, at least a couple of weeks. But with every bit of news that comes out, the market is just waiting for some good news on the talks with China, and that would solve a lot of problems. However, it's going to become earnings season in a couple of weeks here, so we have all of that going on. So, folks, it's going to be a wild October coming up right here. This blue line is the 50-day moving average that I'm talking about. Now, let's look at this very short-term indicator up here, which lasts about 3 days. And if the market can stop at the 50-day moving average and this line here turn around and go up, that will be a short-term buy signal. But that's a lot that has to happen, because Monday is usually a weak day. But if Monday can turn up, or maybe even Tuesday, if Monday's not a bad day and Tuesday turns up, we might get a little short-term buy signal in here, which would relieve some of the pressure on the market. Meanwhile, the S&P, as I mentioned, is testing the 50-day moving average. And as we go down, here's that intermediate term index one more time. And we know that people don't want to be too long the market over the weekend, because any bit of news can come out and send this market into a tizzy or make it rally. It's either one way or the other, but they don't want to be sure. They would rather buy into a rally than not sell before a further decline. So that's why they like to sell on Friday afternoons. And then next week, the market will go titter-tatter one way or the other, and it will set the tone for the rest of the week. So we have some positive things, but we also have some negative things going on out there, and the market just has to sort itself out. Now, as far as our portfolio protection goes, we have put options on the S&P 500 index, and we sold our October put options, which was our October protection, and we rolled it over into November. So now we are 100% insured with November put options on the index, about 10% below the present level of the market. So 10% drop, and these put options will kick in and protect just about all, or maybe even a little bit more than all of our portfolios if the market should fall more than 10%. So we're sitting nice if we're protected this way. We don't have to worry. We certainly don't want to see a 10% drop, but we're ready should it come. So, folks, we had a pretty good week, at least a little bit of the week. It wasn't too bad, but You go out, you have yourselves a good weekend, and we'll see what happens next week. So folks, you take it easy. We're protected in our portfolios. You have a good time, and we will see you next week.